Well, hello everybody. How are you guys doing tonight? What is it? Shortly after 9, about 9:20 on the East Coast. Let's see what the old Mr. Market is doing. Probably selling off. Time for the daily factor tonight after we check the market. Oh yeah, I'm working on some content too. Story of my life, right? Gosh darn it. Okay, so let's just do this. They need to make a fast way to reset trading view. I still miss Thinkorswim. That was the greatest charting package ever. I mean, I guess I could start using it again, but I switched my account and I miss Thinkorswim. All right, so gosh, sorry, it isn't. Let's see. Let's do it like this. Here's a 30-minute S&P futures chart. All right, there we have it. 30-minute S&P 500 futures chart. Let me put it back on the price scale. There we have it. All right, wow, nice rally. We're up at 68.0. We're trading at 68.08 right now. We've saved 6,800. Got down as low as 67.54. But I mean, anyway, now we pop back up 68.10 or so. All right, well, that's good, I guess. It's good, I guess. All right, let's look at NASDAQ. I'm guessing it's going to be bouncing also. There's NASDAQ futures. They trade 23 hours a day. And yes, sir, it is bouncing. It's still down from that aftermarket route that it took and the regular hours route that it took. So it's still down, but it's going back the right direction. You might set up another good sell the rip opportunity if you're trading futures. If it gets up here somewhere and stalls out, maybe. We'll see. All right, let's go here with Bitcoin. We're going to look at Bitcoin 24-hour chart, and it is darn sure going up as well. It is also bouncing up. It's up 2.62%. Well, I would have you notice the most recent half-hour bar has turned back down, and it hasn't yet on the market. But anyway, this is bouncing too. But look at this, 60,000. Are you kidding me? Is that the? But look, I think that may be the 61.8 though. Is that the 61.8? Well, let's just do it like this. Let's just, yes, the 61.8 is actually at 58.3. That's assuming I measured it right, and looks like the market hit at a very low, or I should say Bitcoin, not the market, my bad. The low was 60,001.00. So it got 1 point away from hitting 60,000. Wow. All right. Well, hey, Marcus and William. Glad you guys are here tonight. I tried to do this earlier. That one night was ridiculous. A few nights ago, it was past midnight. I was bored and I couldn't sleep or whatever. But tonight I'm tired. This could be a quick one. I'm going to go to bed. I'm exhausted. All right. So let's do this daily factor thing. I guess we have to look at gold and silver though. We have to look at gold and silver. So I made an easy daily factor. I made a daily factor of stuff I want to talk about, or it's easy for me to talk about. So, or fun to talk about, however you want to put it. All right, gold is still down on the 24-hour period, but it's bouncing right now on a shorter time frame. Silver is trading at 65. Well, no, 71. That bounced up off of 64. I wonder if silver is going to hit at 61.8. We should have measured the silver 61.8. Like I say, it's so subjective on where you measure it from. I might have thought to measure it from here, but measured from here, it's 100% retracement. You know, it's just so subjective. The way those are done, I mean, you can keep finding places to start it until it gives you the answer you want, and that I think that to me is a little dangerous. but let's do it anyway. So the other thing is the other thing is you really think you're supposed to use logarithmic whenever something's rallied that much. So let's do this like. All right, so the 61.8 is right here at 61.210 on silver. I mean, according to where I mapped it off of. I mean, that could be, it could be wrong. All right, on to the max factor, the daily factor. Okay, so tonight we're going to do S&P 500. And why is it saying XPay's yield is 52? Now, that's ridiculous. All right, I won't get mad. Okay, so let's go to the main database. And let's look here. So here I pulled out, I may have missed one or two, but I think I got all the S&P based funds. I tried to get the ones people like. I got, oh, shoot, you got to be kidding me. Somehow I missed freaking T-SPY. Oh, no, I got T-SPY. I was going to say, I can't miss T-SPY. Can't miss SPY. I missed JetBuy, and I missed a few that you guys probably don't care about, or I don't really care about. And I threw in a few I don't really care about either. Buy W. Have you guys ever heard of this one? Buy Right. I mean, that stands for buy right, which is another name for a covered call strategy. All right. Well, why is it saying XPay? So XPay right here, let's drill down on this one. XPay's paid a $10.52 dividend, which is a 19% yield. So why is it saying 52%? Because AI is stupid and is putting the price in the yield column. All right. Well, we can deal with that. We can definitely deal with that. AI, come on. What are you doing? Yield price. So, okay. All right. So, great job, AI. Great job. We'll just have to figure it out. All right. XPay yielding about 20%. It's a target fund. Yeah, it's a target fund. Managed distribution fund, no options. I'm not even really all the way sure if they use swaps. I think they may just, anyway, it doesn't matter. They do a decent job. A lot of people are happy with that one. That was one I made sure to put on there also. XPay, T-SPY, and SPY have to be on anything you're talking about S&P. So anyway, it's gone from 50, ignore the columns. They're obviously wrong. But it's gone from 54.89 90 days ago. They're off by one to 52.73 now. So, or today. So that's a little bit of a pullback. Next, we have SPY. Now, SPY is just about flat on a 90-day basis. It's down 65 bips. We'll just call that flat. Paying about 11.89%. That's really good. Price has gone from 52 to 52, basically. I just like to round. I mean, it's, anyway, it's gone from 52 to 52 if you want to round it. So basically, it's gone nowhere. And so that's within the tolerance. And that way we don't have to think about the math. All right. So here we have Big Y. Now, this is one of YieldMax's better funds, not one of YieldMax's more popular funds. For some reason, no one buys this fund, but it does. It's one of the handful of better performing funds they have. Anyway, Big Y. This is based on the biggest 50 stocks. It's not really S&P based, but I like this, so I threw it in here. It's close enough. So this thing's gone from 52.5 to 51. So it's dropped, and that's about 3%, a little bit more than the SPY. SDTY, now this is from YieldMax also. They do zero DTE options, and they do zero DTE options, and they sell them in the morning, and so they're uncovered at night. This is the uncovered at night strategy. XDTE from Roundhill was the ones that brought us that strategy, then T-SPY, then SDTY. But in any event, they all have it now. So SDTY paid $10 worth of divvies over the past year, $43 price. That comes out to 25%. That's pretty easy. I can do that one in my head pretty easy. All right. Price has gone from 45 to 43, which is down 4%. All right. XYLD paying about 11%. Price has gone from 39 to 40, basically. So that's up less than 1%. Next, we have XDTE. Now, this one is a good one from Roundhill. These people were actually the first people that I know of to innovate the nighttime only, or the daytime, the uncovered at night idea. So this thing yields 37%. That's pretty dang good because they have pretty dang good NAV performance when you consider the kind of yield they put off. So their NAV's gone from 43.5 to 39. You know, it's down about 10%, but they're paying about 37% in dividends. So we'll see how they do. Spin. This is from Spin. Who's Spin from? I should know who Spin is from. I was going to say State Street, but yeah, it is State Street. Okay, well, I guess first inclination is usually right. That's what I've always heard. So yeah, State Street. This is just a State Street. This is just State Street's version of JEPI or GPIX. Super safe, super, you know, just one of those. S&P, I'm sure it uses monthly options, pays a small yield. It's the same, you know, same allocation as the overall market. Same weightings as the overall market. And I bet they sell index options on the S&P. And looks like they have some pretty good upside. They recovered their lows, you know, in August. I mean, they recovered the spring pullback by August. NAV only, that's, you know, that's pretty good. Look here on a rolling 1 year total return is 11.79%. And you can see right here, I love looking at this. See this performance per year? This column at the far right is NAV only. Performance for the past year. Okay, we're up 1.3%, NAV only. But your total return is 11.79%. You can take the difference, and it usually equals this number, or, you know, within a point or two of this number, which it almost does. If you add 8.08 to, you know, to 1.3, you get 10 something. So it's close. All right. So that Spin from State Street. All right, so next on the list is WDTE. Now, this is from Defiance. It used to be called JEPY when I first started, but I think JEPI, I think the guys from, I think Jamie Morgan sent Venuto a cease and desist, or I don't know. I'm just joking. Or they sent the legal department. Legal department from one company sent the other legal department a cease and desist, probably. I'm kind of a little bit surprised that ULTI hasn't got the similar little note from the guys over at ULTY, but we'll see. All right, so WDTE, this is the new name after they had to switch away from JEPI. Now these guys, this is the, this right here is a competitor to XDTE. This is, or, no, it isn't. I'm sorry. All right. Yeah, WDT and XDT should be competitors. They should be fairly close. Yeah, 36%, 37%. These are well, they're both based on S&P. Now, XDTE isn't covered at night. This is interesting. I haven't noticed this before. XDT's not covered at night, and it's not working out for them. But it's because.
Could you try again?
The covered at night, the being uncovered at night helps you when the market's going up. It won't help you when the market's going down. Likely the nighttime moves will be down, or, you know, it helps you when you're in the direction of momentum. Lately we haven't been. All right, so but anyway, WDT and XDT could be a good battle royale. Maybe we'll do one later. I bet XDT beats it, but I bet WDT does pretty well. Based on these numbers right here, it looks like WDT is going to beat it for the last quarter. So anyway, we'll look. Okay, XYLG, this one is from Global X, pays about 14%, but this is that one that their yield's not really real. In real life, this pays 6%, but it had a special one-time dividend. Let's see if they did that dividend again at the end of this year. I mean, I thought it was special last year. They had a huge dividend at the end of last year. Let's see. Yeah, they had another special dividend. Yep, they do it every year. Okay, I guess that's just the way it goes. Well, maybe this fund's not so bad. You only get 6% because it pays 0.5% a month, and that's not guaranteed. They only write options on half the portfolio, so half overwrite fund. But they did that last year. They had a huge payment at the end of the year. I thought it was a one-off, but it was not. They did it again this year. Anyway, I don't think any of you guys have that, but it's not not the worst looking one, but the drawback is, I guess the catch is you get really small distributions during the year. Maybe if you had, this fund might have a use case for somebody that has maybe you're retired and you have a property tax bill that comes due or something, and you have a couple of funds that pay yearly dividends or quarterly dividends, and you could use these, you could allocate to the big end of year dividend for your property tax bill. In Oklahoma, your property tax bill comes right at the end of the year, and I think you have to pay it in January or February sometime. But in any event, my wife always paid it, so I can't even remember to share the screen, so she's not going to trust me to remember to pay the property tax. All right, well, let's go to the next one. All right. But anyway, that XYLG, okay, I disqualified it for a while from the max factor because I thought it wasn't a real yield. That yield's deceiving, though. If people are buying this expecting it to get, that much in even payments, that's not going to happen. But if you're all right with the bigger payment at the end of the year, not guaranteed. I don't think you'll get it in a down year because they won't have it. Because what that is that's NAV they're giving you from all the extra capture they got from just selling half the position. So so you won't get that in a down year. All right, SPUT. Now this is one my friend Marcus likes. Marcus is here. Pays kind of a yield on the smaller side, but look at this NAV. It went from 26.5 to 27. Well, we'll take that. That's up about 1.5 points. That's wonderful. SBAR is another really good-looking fund, paying about 12%. It's gone from 26 to 25. Hey, Tiger, what's up, man? Next, we have T-SPY. Now, T-SPY is paying about 14, gone from 25 to 24. Really basically from 25 to 25 if you round it. It's gone nowhere. Well, that's good. I mean, that's good on these types of funds. We'll definitely take it. Go nowhere because that means that $3.50 is real over this time period. So good job, T-SPY. Now we have XV. XV is a buffer fund, I believe, or a barrier buffer. So this is a barrier, I think. Someday I need to do a video on the difference between the two, but they're similar. All right, so this thing, XV, pays about 20, or it has been. It's paid $4 so far. It cost $24 lately, and it's been around since April. So you can figure out the math, and at that rate, it comes to about 20% annually. Next, we have XLKI. Now, this one, I threw this in by mistake because this is tech. So this would, I was thinking this would be fair to throw in with the Qs, not fair to throw in with the SPY. We'll just look at it for comparison purposes. I mean, it should be doing terrible. If it's doing well at all, it's a pretty good fund because tech is doing terrible. So let's see how it's doing. 19%. It's gone from 26 to 24, so it's dropped $2. It's not nothing. It's not nothing. It's down about 7%, but it's tech. So, all right. Well, I bet that's outperforming the Qs though. Let's do a battle royale. I know this stuff where we're going to weave over into this lane because I like tech and growth. I mean, it hasn't been doing that great for me lately, but I'm just a tech bro. All right. So, okay, this is over the last quarter. So this is kind of the time frame the max factor is looking at. And I mean, that's a good look for XLKI. That's a really nice look for XLKI. We need to pay more attention, or I need to pay more attention to that one. I haven't heard any of you guys talking about that one. Good job, Tiger. Tiger got him some XDTE today. Nice. You may want to look at that XYLG or some, not Tiger, any of you, if you can deal with the smaller monthly payment and you want a little bit bigger payment at the end in a bullish year, potential bigger payment, that XYLG is actually a pretty good performer. But yeah, XDT, you have that big dividend all the time. You don't have to wait for the end of the year. They pay you around 3% every month. So, all right, let's get back here. XLKI, YSPY. Had this one myself. It's really not doing that bad. I mean, it's paying a 56% yield. So that's a lot of yield. But when you consider that much yield going from 18 to 17 or 19 to 17, down $2, that's really not that bad. Really not that bad at all. All right, then we have SPY-T. paying 21%, and their NAV has dropped from 18 to 17, dropped $1 about, it's dropped about half what Y-Spice has dropped. So it's a little better, but it's paid much less than half of the yield. But just eyeballing that right there, just eyeballing it, Y-Spy looks better than SPY-T. Well, we'll check it out. We may do a battle royale. Then we have this one is S&P. It stands for buy right, and that's what old timers used to call covered calls. Covered call is the buy right. Covered call is different than a buy right. Covered call is when you already own stock, and then you sell the call of stock you already own. A buy right is when you go out there and you buy 100 shares of Apple and sell a call simultaneously, but it's a covered call strategy. But it's where you pair the trade together and you do it at the same time. But anyway, so that's what I'm not saying that's the way they trade it. They just chose those symbols because old timers know what a buy right is. All right. So, and I am an old timer. So my grandfather used to call them buy rights. My broker back in the 80s used to call them buy rights. It's an old time thing to say. All right. So what are you guys up to tonight? We got Tiger in the house. Tiger aped into XDTE. Glad to hear that. Bikerman, hoping the sell on silver lasts through the weekend so you have a chance to, get some physical silver. Absolutely. Foolish not to take profits of gold and silver run up. I know it. Why didn't you? Gosh darn it, Charles. I need to give you my phone number. And next time I just need to give you the sign into my tasty trade. And next time I need to sell gold or silver, sell it for me. Gosh darn it. Futures offloads, bouncing hard right now. So we'll see what happens by the morning. And Bikerman's hoping for a little further sell-off. All right, let's look at some more metrics here. I really like this one. What I'm beginning to wonder about, last night we did the max factors, all the really high yielding funds. A lot of them were yielding like 200 or 300%, and no one really yields that much, but it's because of the math anomaly that I described to you guys last night that I don't know how to fix. I can't think of a fair way to fix. I know how to fix it, but I can't think of a fair way to fix it. So what I do think, though, is the max factor does work well for funds that are normal like these. I mean, because I think all these yields are representative of what they really pay. They aren't distorted by the massive, sell-off. But this is more like I guess you could call this more like a distribution yield. Well, it's not really a distribution yield because it's not the most recent payment divided by the most recent price, but it's the most recent 12-month. Anyway, I think this works well on this. I was disenchanted last night, but I think this is going to be a good comparison. I think there's a lot of good funds on here. Okay, so let's look at the vol of these things now. So I measured the vol mathematically. The least volatile one is XYLD. It's only a 6.3, or I hit the wrong thing. Least volatile one is actually the buy right. It's only a 4.8. But then XYLD's a 6.3. So this is equivalent to VIX. I made this kind of the way they make the VIX out. Not really, but I simulated. So it should be on the same scale. So XYLD tracks the S&P. Typical volatility, 13, 12, 15, something like that. So it's about half of that. It's about half as volatile. SPU2, super safe also. SBAR, super safe. SPY-I, super safe. Okay. Then we get into WDTE, SDT, and Big Y, SPIN, XPay, SPY-T. Those are all 10s. So that's kind of the middle group. And those are all a little bit less volatile than the underlying. But then we have kind of the more on the riskier side. Then we have XV. We have XLKI, of course, it's based on tech, so that explains it. We have XDTE. Now, the higher dividend adds some risk in. Then we have XYLG, and I don't know how that one got on there, but it's just been volatile. Actually, I have a theory on it. I do know how it got on there. Anyway, but it's fun. Okay, so. But I wouldn't really think of XYLG being super risky, only paying 6% and only riding on half the portfolio. But the reason it got on there is because all I'm measuring on volatility is the standard deviation. Well, they paid it the 90-day standard, but the daily standard deviation. How much does it move from one day to the other? Okay, so XYLG had a $2.10 dividend, and it probably I didn't put in there to use the dividend. I bet it's using the pre-dividend adjusted, so it probably sees that as a $2 gap, and it's boosting this up. On a normal day, XYLG is about as volatile as XYLD 6 or something. Anyway, but we can translate that into a stable DEX. And the stable DEX is just the ratio of how safe something is compared to the broader market. Let me see. Is that no? That's not right. Well, I'm not sure what stuff is. I thought I knew what it was, but I thought it was just one. I can't believe AI messes this up so bad. AI usually does a great job of this stuff. Anyway, whatever. I'm not worried about it. Let's just sort by Quandex, which is the same thing as long-term max factor. Okay, look at that. Would you take a look at that? So of the ones that have been out a year, so that means not including YSPY, XV, XLKI, SPUT, or SBAR, not including those. Big Y was the best risk-adjusted reward. And why is that? The volatility is a 10. So that if it had a VIX, it'd be about a 10. The market's about, so it's about, it has about 80% the volatility of the broader market, right? So I can't believe this. I take that back. This is the volatility one. Well, anyway, all right. The least volatile one's buy right. The most volatile one's YSPY. It's easy to figure out why. YSPY is levered, pays 50%. Buy right pays 5%. And, XYLD is super safe also. And so is XYLG, ignore my metric. All right. So the long-term max factor is big Y number 1, SPY number 2. Spin number 3. And I'm going to give spin number 1 probably in the editor's choice because it was positive on NAV. Yeah, but it did. Anyway, we're going to look at the editor's choice. Or T-SPY is tempting also. T-SPY is really tempting for the editor's choice. It got marked down because it's a little bit riskier. Anyway, T-SPY is 4th, and then the buy right is 5th, or buy W, XYLG, XPay. I'm a little surprised XPay isn't higher, but its NAV was down more than any of the ones above it. Any of the, so that the NAV really hurts more because the NAV affects your ability to compound. So the max factor really takes the NAV a lot more serious than the max takes it. All right, so let's look at the short-term max factors. I don't know which one that is, though, is the problem. It's the same thing as sustainability, and sustainability is I can't freaking believe this. I cannot believe this is the simplest thing. AI, you guys, what are you doing? It's right here. Look, ticker trailing 12 month. But it messes up at inception. Okay, so at inception it messes up. So everything goes one column over at inception. Yield, price minus 90, price minus 360. So the short-term max factor that's not right then. There it is. Okay, that's right. There we have it. Short-term max factor. So this is the max factor. Number 1 is spin, and a good because I was thinking about overruling it. I mean, when you have, that's the best NAV out there. I mean, spin's incredible. It only pays 8%, but I mean, for safety, stability. Anyway, XYLD is a good one too. It's safety and stability. The max factor may quantum may factor safety in a little too much, but I would rather factor it in too much and too little. There's still some good funds on here. SPUT, SPUT, Marcus likes. SPY is down here. SPY is only lower than these because it's a little bit more risky and that, you know, it doesn't have quite the total return when you factor in the negative NAV. Then we have SBAR and T-SPY right there. The ones that pay a little higher yield, at least over this time frame, haven't done quite as well as the ones that pay lower yield. So, oh well. T-SPY, and when the market turns up again, T-SPY, big Y, T-SPY, and the go-go ones should shoot right back up to SPY. Should shoot right back up to the lead. So, okay, here's something I really find interesting about SPY. I'm going to swerve over into the SPY lane. Then we can shoot the breeze about whatever. Look at this. SPY, and we looked at this earlier, and I looked at this by myself later. SPY is amazing over this, well, since October 31st. I guess that's over this quarter, yeah. SPY is just, it looks like it was never behind. It looks like on a total return basis, it was beating SPY the whole time. That's wonderful. That's not always the case. Just had a good quarter. So to be fair, like we always say, over a long enough time frame, none of these, no matter how good they are, over a long enough time frame, because of the fact that there's no free money for a long enough time frame, you know, these are going to underperform, but we can try to pick one that underperforms maybe a little less than some of the other ones, right? And so SPY is one of the better ones. So let's do this. Let's go back a year on SPY and see over that time frame. It's still really good, but I think it does fall back to earth. Yeah, it is really good. You know, yeah, that's still really good. SPY is up 14.3. SPY is up 12.8. I like it. I like it. I wonder if they'll come out with a, you know how they have QLDY. I wonder if they'll have SLDY or something. I wonder if they'd have an S&P version of it. But all right, so let's talk. What do you guys want to talk about? Yeah, I need to give Charles my sign in, my passwords there. Yeah, or somebody, because darn it. Sometimes I'm so disciplined and overcautious, and I'm too cautious, and then sometimes I for whatever reason, I'm not cautious enough. All right, crypto sell-off money has to go somewhere, maybe back into SPY and Qs. Yeah, at some point there'll be a flight to safety, and even if there isn't, like I say, at some point there'll be a massive bounce, and after the massive bounce, you know, that might be a good time to adjust positions. I might adjust some positions there. Yes, Bikerman, we'll look at ICAP for the same time frame. Yeah, good one. ICAP should have been on here probably, and I don't think it's in the max factor yet. Let's do this. I mean, we were talking about today, and I said I need to put it on the spreadsheet. I don't think it's there yet. I'm up to like 220. I remember when I just had like 110. We're just adding like crazy. All right. So over the past year, now that's a good look. So I can't. How did I miss this one? Well. Oh, yeah, this is the one that's ASGI, but except for ETFs. That's right. But ASGI is not income. Yeah, it's income. That's right. It pays like 12% or something. This one pays 8%. Yeah. Good looking funds right here. Performance for the year. NAV performance up 6.48. Total return 17. The difference is due to the dividend, which is about 9. 9 plus 6.5 is whatever that is. What, 15.5, and that's almost 17.5. All right. Yeah, but that's a good one. Let's that is a good one. I don't know how it's not I don't know how it is not on the max factor yet, but let's just go slap it on there. There may be some ones we need to put on here too that are old enough now. But anyway, let's see here. ICAP. All right. So you have to have had 90 days. So your 90-day price is in column F. So F can't be an NA. So if F is an NA, they aren't old enough. But basically, all of these are old enough. The only ones we're still waiting on are MAYY, and there's some kind of data error on that, and XRPM, and that's a Ripple-based one that's fairly recent. But heck, we need to. So, and these are in there. EHI, KSILV, SLJI. We are now measuring. So they're all in there. But yeah, 221. I mean, I remember when I had like 120. And then I remember for a long time I had 150, 160, something like that. And then I let BR send me a bunch of closed end funds, and probably 30 of them or something. We put those in there. Oh, yeah. So then we had like 180 or something. Then State Street released those 13 funds. We put those in there. Every time they release one, we throw them in there. And all of a sudden, now we're at 220 of them. It's crazy, isn't it? Absolutely crazy. Let's go see what the market's doing. Is it still bouncing? This darn thing better still be bouncing. ES is down a quarter. NQ is down 40 bips. Bitcoin is +3. Bitcoin's really all that matters to me. I mean, because of my blocks and all my exposure, I need Bitcoin just to rip higher, 10% one day, 10% the next, 10%. I mean, because really the big stocks, well, tech has sold off, but SPY is really not down that much. I just have to have this economy recover, or at least bounce enough where I can line up a little bit. Line up and put a little ICAP in there, a little, I have some things I want to get. I have some things I want to get. Yeah, Hood is definitely getting hammered. Yeah, Z Bikerman, it did have a good last quarter compared to SPY. And SPY had a good last. They both had a good last. Yeah, and it even had a better one than SPY. Oh, wait. So you're looking for a Bitcoin rebound since it's, yeah, no, I know the 50% off. Surely that should at least be a bounce point. I mean, the scary thing is, though, it may be a sell. Even if it does bounce, bears might want to try to sell it and try to play for the 61.8. So, and you're saying IRS is not taking Bitcoin as tax payments. So you're saying that's bullish or bearish? I'm trying to think. I'm not following I mean, I get what they're doing, but I would think that would be bearish. I would think if they were, on the other hand, if they take Bitcoin for tax payments, then it's going to decrease that. Well, I don't know. I'm going to have somebody a lot smarter than me explain that to me. So Charles is in here. So Charles, yeah, you think it's a reason to fuel this up? Oh, you think it is the reason that fueled this sell-off? You think that, I mean, this in the back, that this is part of the reason, or do you think it's, when did it get announced? Hopefully this has been out for a while, or did they just make this news today? Anyway, taxes owed in U.S. dollars. I see. So if you owe taxes in U.S. dollars, you have to pay in U.S. dollars. Let me make sure I didn't miss any comments here. I hope that XDT works out for you, Tiger. I hope you get your sell-off, Bikerman, for one more day. I hope you don't get a sell-off. I just hope it's flat tomorrow. I'll be all right. Flat tomorrow, but then you go this weekend, and then we're going to start melting up Monday. Yeah, good point, Marcus. CF Hulse. Yeah. Yeah, panic selling in well, I mean, I would call that some panic selling in tech. I mean, what do you call AMD and Amazon? And I mean, it could get a lot worse, though. If you look at the tech index, you're right. The index is not panic selling. I guess not panic selling at the index level yet, but at the single stock level, it's getting pretty nasty. Yeah, you're right, Charles. You're right. A 10% sell-off in Q or SPY happen often, but is this time any different? Yeah, maybe not. Except for, but yeah, I was going to say, I'm not saying the same thing you are. Well, I would say the only thing that may make this different than a 10% sell-off another time is how far crypto's down, but actually that may not be true. Let's go back to April. What was crypto down in April? That doesn't go back far enough to see. Well, let's do it like this. Well, we could just do it like that. There we have Bitcoin up there right now. Yeah, I mean, and hopefully crypto, because the 61.8 is a serious bounce zone. You know, that's hopefully we're in good shape. All right, so where is April? Yeah, so no, April wasn't great. Bitcoin dropped from 109 to 75, so that's 35%. I mean, and that was nasty. That was nasty, but it was also a buying opportunity. You made one low, then a little bit of a lower low, and a little bit of a lower low, and then we bought her up. This bear wedge wasn't a good sign. You know, this time it made a bull wedge, and then when it broke, no real bull wedge here yet. So it's unbelievable how well SCHD is, but I'm so happy for those people. Or not only SCHD people, but value stock people. Value stock, all the growth guys have had all the fun for lately. But this happens every few years. So the value it'll start, people say value's back, and then it'll just peter out again. So but it's definitely back this week. So Charles is saying we think we have a rally up Friday and more broadcast. Yeah, that sounds good. I'm going to use any rally opportunities to de-risk, just like I had been. But I pretty much have. I mean, I don't know what else I could de-risk. I guess blocks. I guess if I get a rally, I'll maybe take half a blocks down or something, and throw it into ICAP or something. Throw it into something. Throw it into SPY or something until this is over. Okay, Charles. Microsoft. Yeah, that's. I mean, okay, I forgot about Microsoft. So in some tech stocks, in AMD, Amazon was probably the ugliest chart I saw today, wasn't it? Now, one of them had a big gap yesterday and then a giant gap again today. Was it AMD? Was it? No, Broadcom's been holding up all right. Intel's actually the bet holding up good, but of course the government's in on that one. Kind of a little quasi government bail out there, bail in or whatever. All right, Dow Jones saying why are the markets down? What's the catalyst? It seems down across. Yeah, it is down across the board. My thing, what I think the overlying thing is, and this is in my brain, is the first quarter is terrible. The seasonals are terrible. Look at this. I could show you this. I could show you the seasonal factors. And I've been using. I mean, I always like to try to be long towards the end of the year, long in the summertime, and cautious in the first year. Anyway, so green is last year, and orange is 2 years ago. So you can see the high for the spring last year was, February 15th or something. And then we sold off. But then the year before, we had another solid. Somewhere there's ones that give you like an average. Oh, yeah. Okay, so, here's all the years here. Is January's never good. I'm telling you, nothing. January, February, March, April, the first quarter's never any good. But yeah, we had a rally. We had a rally in January, whatever year. Yeah, and then, but you see what I mean? There's just a tendency towards weakness in the February, March area. I think February is actually the weakest month of the year on a seasonal basis. So I'm doing that, plus the market being super oversold, plus plus the current events as far as wars going on and upheaval and stuff being, you know, not great. You know, the combination of all those things together is what I was why I was looking for a pullback. Plus, the other thing is I had some stuff that was way up towards the end of last year, and I just wanted to like GDXY was way up and GPTY, and I wanted to protect my account. I just didn't protect it well. I should have protected a little bit better. All right, well, what you gonna do? But yeah, I'd say it is. I'd say it's down across the board. So I'd agree with you, Daltone. All right. Charles says the MSFT softies big cap weight in my tech ETF. Microsoft's. Oh, it's weighing down your you need it to bounce. Yeah, the idea that crypto just keeps going up hard to change narrative to buy the dips. Some people just won't listen. I mean, I hope they're right or whatever, but I mean, that's why the blocks is what, 12%, and then I have BITK 6%. So my direct allocation is like 20%, and that's still too much. But I mean, it has lately. But anyway, Jeff's in the house. Hey, Jeff. Google down 8%. Yeah, we were talking about the tech sell-off. I was trying to say what was the worst looking one. And I said AMD or, oh, this is cool. You could show the monthly returns. Look at this. So see what I mean? February is terrible. And I'm just going by the experience. I've never even seen this chart. I mean, they talk about it on they talk about February being the worst month of the year on CBC. But I'm just going by you know, I mean, the first quarter 2020, obviously. 2021, January was bad, but then the rest of the year was great. Well, that was just a face ripper. 22, when did the sell-off start? It started in the first quarter. I mean, it started in the high of the year was in January. We sold off in February, bounced in March, sold off. We got under the 200-day this year in like February and stayed under it until October. So that's why you see a bunch of red. We're under the 200-day moving average. And like I say, nothing good happens under the 200-day. 2023, we had a bounce, but February was still weak. But then we rallied in through the summer. They used to, when I was in the 80s and 90s, people used to say sell in May and go away. People still say that. In other words, that summertime, the markets were dead, didn't go up, or whatever. Not lately. Lately, the summer this year was wonderful. Summer of 25, summer of 24. I mean, there was one year we had a problem in August. It was 23. Yeah, in August and September and October. Was that right? Or was that 24? Now I remember that August pullback. It was actually August of 24. You can't see it on here. It didn't last a whole month. We did have a nasty, and I actually called it and got short at the top, and it was beautiful. That was a good one. I mean, and I talked about it a lot on the live stream, and other people. I think Rob got a piece of it. Other people that were trading. Yeah. So what I was talking about here is with that April pullback. It looks nasty, but it could be a lot worse. Yeah. July, September. My pros over Joe's just started screaming. This one was easy to get. I thought I did well on that one. Did well on that one, but I missed this one, or I did not do well lately. So you have to do well all the time, not just some of the time. Yeah, I hate to hear the Google's down because it could be ugly. But on the other hand, I have puts, and well, I don't want the market to crater because of my stupid 2-lot put trade. But what I want to do is I want the market to, with all the bad news overnight, the market opens lower, so I can get out of the puts. Then I want it to rally after that. Hopefully we'll have a short covering rally because it's Friday at some point. I'm just looking for a lower open so I can dump my puts. AMD, ouch, just built a 10K position in AMDW. I hope you built it after, but anyway, if not, AMDW, you just, will catch up fast. The good news is it'll catch up fast. Just because of math. It'll catch up faster than AMDY would, just because of math. All right, guys, I'm running out of stuff to talk about. I'm doing some cool stuff right now. Do you guys remember when I did a video on this fund, SNTH for measured risk? Do you guys remember all these? Remember I did a video called How to Prepare for the Coming Bear? Well, I went back and watched that video today, and I'm going to do it, and I'm doing it right now. I'm doing an update, but so we talked about some stocks. I recommended a few stocks in case the market sells off. That night we were talking about SNTH, something from Amplify called SWAN, SWAN. Then, of course, CAIE and some of the buffer funds, Triple QH, Chaos, whatever. So I thought it'd be fun. It's been about a month. I thought it'd be fun to revisit that and see how they're all doing. And I'm working on that right now. And hopefully this will be a good video. I haven't made a good video in a while. Hopefully this will be a good one. I mean, I haven't had a video that's had more than 200 views in 2 months. Maybe this one will be a good one. But anyway, I'm going to go back and revisit this, and then I'm going to throw in a few new suggestions. So basically last time, I think we also talked about the dual direction funds, but mainly the suggestions were SWAN, CAIE, Triple QH. Those were mainly the suggestions. All right, so what are the new ones I want to talk about? So I'm going to add a few to the good list. So I'm going to add CaseFi. We talked about that the other night. It's from Creighton Shares. What else do I need to add? What else is going on in buffer right now? Isn't there one called KIIQ that I need to add, or what else is going on in buffer funds? And there's another Creighton Shares. Okay, so maybe I just need to add KIQQ and definitely CaseFi. There's another one that old Mayor sent me, but no, I think it's CaseFi. Yeah, CaseFi is the one I need to add. For some reason, I thought there was another buffer fund somewhere that just came out. So this thing right here is the whatever Insperry X NASDAQ Dynamic Buffered High Index ETF. All right, well, it looks kind of boring. Let's just go look at the performance. Let's just see if it can run with SPY. Well, been out a month. And the NAV has gone from 25 to 24. And it's paid a 19-cent dividend, so it's way too early to tell. SPY over the past month, its NAV went from 53 to 52.5, basically. Rounding, I like to round, as you guys know. So, SPY did better. Is KIQQ monthly or weekly, I wonder? Probably monthly payments. Surely it's monthly payments, right? Well, we'll just look here at distributions. That lineup looks kind of familiar. You see those stocks in so many funds. NVIDIA, Apple, Microsoft, Amazon, Meta, Alphabet, and Tesla. It doesn't get much more basic of a portfolio than that. What do you guys think this is? Receivable plus NASDAQ, some kind of swap. It's maybe they're long NASDAQ, whatever this security is. It might have been. And then short Fed fund futures, and it's a total return swap. Or it's a swap that somehow has something to do with NASDAQ or something. We could probably ask AI. Maybe I'll do that later on my own time. Well, I thought it was good. I got you. There it is. Maybe I'll do it on your time, whatever. We'll just do it on your time. Make a new chat. Yeah, we'll try Opus. Heck yeah. Claude Opus 4.6. I remember when I was using Claude 4.0. And I was using 4.5. Now I'm using 4.6. How fast they grow up. And I'm going to ask Claude. All right, we'll see what Claude says. Oh, Chad, what's up? You got you some of the now. Chad here. Chad's oh yeah, HEQ2. That's exactly what I was thinking of, Alan. Because I'm trying to update my video and I want to put some new ones in. So I like K-SPY a lot, and we looked at that the other night. So I think I'll do K-SPY, KIQQ, and HEQT. Yeah, I think that's a good one. Oh, you're saying Hilo also, yeah. So those are that laddered JP Morgan stuff. Yeah. Let's just look at let's just eyeball those really quick. Well, we'll run them against KIQQ. Let's just run HEQT. KIQQ hasn't been out, so let's run it against SPY. Okay. I mean, that tells the whole story there. You can see the April low, HEQT was down 12 or 7.5%. It was a drop from 10 to 92.50. The other one was down 10, 11%. But it recovered. So it depends on what you're looking for. But then HEQT sold off your upside, but you didn't have as much downside. So that's just math right there. Those funds are probably equal as far as, I mean, when you break it down, they're probably very similar investments. One of them gives you, I mean, I don't know, maybe not. We'll see. SPY is definitely doing better over the past year. There's no doubt. SPY does a good job. Now, but if the next year is like 2022, HEQT will do better than SPY, I would think, if we have an extended downturn. But in a quick downturn like April, yeah, then probably your best to stay in SPY. All right, so yeah, I'll definitely put HEQT in there. So I'm going to get out of here and go finish up that video, but I'm just trying to give people ideas, you know, hedging ideas. It seems like you guys have already been on top of this. You guys have been talking a lot. A lot of you guys have added SBAR or CAAE or CAIQ. So I think you guys are, hopefully you guys are doing well. So anyone checked on Michael Saylor? I'm worried about that guy. I mean, so 460 to 100. That's bad. That's like, you remember, I think it was all the Tesla almost had this, but I remember Tesla, everyone loved it. Just same thing as Misty. Everybody loved Tesla for a while. It was doing great one summer. And then it sold off like 70, 80%, something, just a massive move like this. And then everyone hated it. I'm going to try to find that. Yeah, it was this, 418 to same move. I mean, it's basically the same numbers, 400s to, the Mr. move was like 450 to 110 or something, you know. Blood in the streets. Are we eating tomorrow? Relief rally? Hopefully. Hopefully. Happy birthday, Claude. Oh yeah, let's check and see what Claude came up with here. Okay, so this is total return swap notation. Here's what's happening. So RECV plus NDX, blah, 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 divided by minus Fed funds means you received the total return of the NDX, whatever that thing is, and it's it's fine. It's just the NDX. And then I thought it might be like an option or a strike, but anyway, then it says you pay, and you pay the Fed funds rate. Of course, that's your financing cost. How stupid can I be? Oh my gosh. All right, that was an easy one. think of this as a synthetic long position. Instead of buying the actual stock, you just enter a swap with the counterparty. You get this, yeah. You pay the cost of borrowing. It's just like going on margin, right? Or not. I don't know if that's the proper thing to say, but it's kind of though. And so we all know about the Fed funds rate and practical example. Okay, if the index returns, I wonder if these are 1 day swaps or 1 week. I wonder how far out they go, but I guess over whatever time period they go to, if the index returns 10%, Fed funds is 4.5, you receive the difference. So why use swaps instead of buying the index? Capital efficiency, tax advantages, leverage, and flexibility. Yeah, that's pretty interesting. I'm glad I thought to do it. Yeah, I don't know. I mean, at some point, missed a reverse split. Yeah, I mean, probably not. I mean, it's missed, but Misty's probably getting ready to reverse split. I mean, I don't know. Let's see what Misty looks like. Didn't Misty already reverse split once this year? It's still at 19 though. Well. All right, so I'm going to get a little longer term chart out here. Yeah, so there is Misty right here, and this is dividends factored in, obviously, because this thing's doing so bad. The dividends not factored in should just go straight down. If you don't factor in the dividends, there's nothing left because this is just because the NAV's just right. So I'll show that to you. Yeah. This is what happens if you invest in one of these funds, but you don't take the check. You don't cash your dividend checks or whatever. This is how the investment will look. But obviously, you're going to cash your dividend checks. What was their special? Oh, yeah. So they split 1 for 5 right here. Yeah. Well, they got a ways to go before another split. Yeah, blocks at 10. I looked into, okay, so here's something I wanted to say too about blocks. It's right here. I pulled up blocks' trades and alphabetized them, and I'm looking for evidence of hedges. And I think maybe I missed this MBTXW. This is a micro Bitcoin. MBTX, I think, are micro Bitcoin futures that trade in Chicago. And then I think that's what it is. But they also have options. I think these are futures options that go with this index, or maybe futures wrong, or maybe they're index options like SPX and NDX. I think that's what I think these are micro indexes, more like but it has exposure to. Well, let's just look at MBTX. Let's just go look at it. Well, MBT is micro Bitcoin futures. I was right about the Chicago part. It's on the CME. Massive, ugly gap down. Oh, it's monthly though, but a gap on the monthly chart's ugly. That means a gap New Year's Eve to New Year's Day. That means it was selling off, and it was past New Year's. I've never traded options on these, but I've gone into option strat and simulated a trade or two on these, but I wouldn't even known about these until the fund started using them. I never heard of this. All right, but anyway, that is that's the instrument, and they don't own stock in it. And why is that? Because there is no stock. Just like the SPX, you can't buy stock in the SPX. You can buy ETFs that are based on the SPX. You can't buy stock on the NDX. It's just an option trading. And it's actually just basically a numerical index only. And then they added options to it at some point in the 90s. All right, but this one is a more recent one. So yeah, this one, I mean, I thought, okay, well, good. Maybe they're saying maybe this is the hedge. And so I went and I looked at it, and you have to look at what they're buying and what they're selling. It's kind of hard to interpret, but let me just highlight them for you so you can see them. Okay. I'm just going to look at the highest number. They're all puts. 200 is the highest number, and they're selling it. Okay, so when you're let's just put it into the let's just put that in Doxystrad. So they're selling the 200s and the 195s and the 165s. They're buying the 155s, the 190s, and 185s. Okay, so it's this trade. Is this trade? Micro Bitcoin, yeah, and then it's CBOE, mini Bitcoin. I think the MBTX, that's right, that's its own index that's actually not a micro but a mini, so probably 1/10 of the micro size. The micro size is 1/10 of the real Bitcoin size. So that is what we're looking at, and now let's look at the expiration. So these go out till they all go out to next year, February of next year. So March, April, May, June, July, August, September. They don't have February of next year in here. So anyway, I don't know. I was just trying to. So if you sell, I'm having a hard time conceiving of this. So you sell the higher strike, right? So you sell the higher strike, and you full put spread. Sell the higher strike, buy the lower strike. It's not a hedge. What they have on is a bullish position. I was thinking maybe it was like this. Maybe they put on I just don't see any evidence of hedges. I think what David means there is that he rolled his legs closer together, or rolled adjusted them where it's, but I don't see anything that's like any type of, I don't know what he's talking about. I mean, I don't know what he's talking about. Yeah, it's unfortunate Blocks doesn't have, because I looked and so it's not that, because they had on multiple tranches of that, but they're all, the one they sold is a higher put than the one they bought. So they're all some form of fit, some form of that type of look, which is a collar. That's a synthetic collar. So it's actually giving them long exposure. It gives them and it gives them a credit. It gives them long exposure to the market, to a point, and a credit. That's just your standard, that's just your standard bullish play. So then other than that, they just have the same thing they usually do. So NVIDIA, I mean, they sold the 195s. I guess what he probably means is they probably scooted the puts closer, and they probably would have lost 15%. I'm guessing maybe if they hadn't done that or something. But as it was, they just lost 10%. But there's no really like convex hedges like Tuttle is showing us how to do, or like some funds do, where they make a bearish bet. Sort of cool Coinbase. Glad these guys don't have CleanSpark. They have some other dogs in here. Bitmine Immersion for one. Yeah, I don't see any hedges there, guys. Anyway, I don't think any of you guys are even in that, or very few of you guys are. I'm the only one that still likes that, probably. I bet Marcus still has some, but I mean, it's probably part of his barbell. But if any of you guys follow me into that, I sincerely apologize. But I still think it's a good ETF. That's just bad timing. Yep, I guess. Old Chad is saying, well, DCA it is. You know what? Here's the solution, Chad. Two solutions. We could DCA it, or we could sell it all and put it in Styx and go to the Styx concert. You gotta like that Styx concert, right? You guys know what Styx is, don't you? Little TSYX action from Tap Alpha. Didn't do great today, but I mean, what you gonna do, right? Yeah, I was talking about blocks, Marcus. I know it. I do too. It's a good fund. It's just there's different funds for different seasons. It's probably not the best one to own during the crypto pullback if you know what's happening in advance. But in a crypto rally, it's going to be glorious. It has been glorious. All right, guys, I'm thinking about getting out of here. I'm kind of tired. See, I knew you'd agree with me. Buy Styx. Buy Styx. I remember the inside joke this time. Fool me once, shame on me. Fool me twice, never going to fool me again, or whatever Bush always says. Oh, my gosh. All right, guys, I'm getting punchy. I'm going to get out of here. I'm going to take the dogs to go pee, and then I'm going to crawl in bed. But this hedging video will be out tomorrow, hopefully. All right, I'll get up in the morning and do it. Welcome to the Grand Illusion. What's the next line? Welcome to the Grand Illusion. Such a great song. I can't remember anything other than the first line. But yep, the Tap Alpha funds are going to become Wall Street legends. Absolutely. Fear is actually a left-wing, a Democratic hoax. It's a hoax portrayed on us by the Democrats. I'm totally joking, guys. I figured I corrected it. When I read it, I corrected it live. I knew what she meant, and so I read it. These Tap Alpha funds are going to become Wall Street legends. Yeah, they are. And I think the Neos ones are on their way to becoming legends. It's just, I look at the brand value. There's a lot of good brand value in Neos, it seems, and it just, and also in Tap Alpha, but then also in other ones too, JP Morgan, and there's other ones, Rex. All right, Jackson's whining. I better get out of here. All right, guys, thank you so much. Jackson, you want to make an appearance? Come up here, Jackson. You want to make an appearance? Come here. I got a treat. You want to come here? Here's a treat. That is so mean to do to him. I'm sorry, Jackson. I'll go give you one outside. Jackson's jealous and being super needy today because that little dog's here, and he's just jealous. All right, Jackson, say hi to everybody. Look how pretty this dog is. Look how big he is. All right, guys, thank you so much. Have a great evening. Remember, not financial advice. And if you'd like to support the station, you know where to do so. Don't worry about it. It's fine. But if you'd like to, you can always go to PayPal. And my address is on my YouTube channel. All right, William, Chad, you guys, Skeptic, all of you guys, Andre, I'll talk to you tomorrow.